Hey, what's up, you guys? Q here from Hyperstocks. Today I'm going to go over some of the best setups that I'm finding on the market as of August 13th, 2020. Now, the market overall is at a pretty critical level. SPY, or the S&P 500, is at the highest point that it's been since the February high before the coronavirus crash. With that being said, a lot of uncertainty is happening around the recovery of the market, especially given the details of the economy and how weak the dollar is becoming and overall economical struggles that we're having as a country. But the market seems to be thriving and stocks seem to be hitting all-time highs on a daily basis. So a lot of uncertainty around that area, but markets aside, and assuming that markets remain healthy and they don't crash or have a major correction anytime soon, these are the best setups that I'm finding. A lot of these setups I'm gonna go over and I'm gonna go through in a very thorough manner. That way you understand why I'm choosing them and how I'm seeing their potential in the future, along with some price targets to trade off of. I'm also gonna make the video very educational. That way everybody learns exactly what I'm doing when I'm finding this analysis, what I'm looking for, some of the ways that I make trading ranges, and some of the ways that I analyze micro and macro candlesticks for detailed trading and safe trading. Now, with everything being said, I'd like to remind you that this is not investment advice. You trade at your own risk. I do encourage you to do a lot of studying on a lot of charting and a lot of analysis on your end before jumping in and out of stocks or setups. That way you're familiar with the trade just as much as I am, and you're comfortable with your position as well. So without further ado, I'm going to go ahead and get started. But first, before I jump into the charts, I'd just like to explain the system that I'm using here. This is tradingview.com. This is an online website. I use the free version. You can sign up for the premium version. Honestly, the free version works for me perfectly. I use Thinkorswim combined with tradingview.com for all my charts and my analysis. I find both of them very useful when I jump back and forth between them. Now, this is not a sponsored ad for them or anything like that. I'm just a very big fan of their platform and the interface that they've built. So I'm going to go ahead and get started. The first stock that we're going to go ahead and get started with is going to be CHGG.com. So CHGG.com, if you're not familiar, is a school-related website. It's an online website when students can purchase books or rent books primarily. It has a lot of involvement with the educational system, and as you know, around August, school starts to come back and a lot of schools are opening back up. This time it's a big deal because we are opening back up from the COVID-19 break that we've had. So students were sent home early across all schools in all districts when COVID-19 hit hard. Therefore, school has been shut down for quite a while, but CHGG seems to only be moving up. Recently, it's given us a perfect pullback just before school has started for a possible entry and potential strong price target. So what are we doing in terms of technical analysis for us to trade the stock? So the stock itself, CHGG.com, it's not enough that we know that the company and schools are opening back up. So you never just want to trade based on what you think is about to happen. You want to take a look at technicals and you want to see what the candlesticks are doing on the micro and the macro picture before jumping in and out of a stock. So let's go ahead and take a look at what CHGG is doing on the macro picture. So I've already laid out some lines on here. I'm going to go ahead and just remove them for a second, and I'm going to focus on this green candle that occurred just today. So the last candle on this chart represents a buying candle after 3 strong days of selling on the stock. Now, the selling that happened from the stock likely happened because of a price in due to earnings. So people and investors were anticipating an earnings beat or maybe a strong earnings from the stock, and they had been pushing it up until the date of earnings. So by that time, it already needed to be corrected. It already needed to come down. And a simple correction, a simple way to break it down is all the people that bought it up need to take their money out. They want to take their profits out. And the less buyers it has, obviously, the more the stock drops. So the stock drops from a high of 87 to 73 at one point in the past week. And today it had a strong day that pushed it back from the low of 73 up to 76.86 where it closed. So what do we want to see from this point moving forward? So it's not enough to just have one single candle or one single green candle for you to jump into a trade. Personally, I like to wait for another green candle to form, or a candle just above this candle with a little bit more volume for it to push back up. And I'd like to see it push over that 20-day moving average. So these two lines are the 10 and the 20-day moving average. I'd like to see the stock pushed back up over the 20-day moving average, and now the 20-day moving average will turn from a resistance to a support point for the stock and carry it back up. You can see how in the past the stock has come down to it, but it found support at it and it pushed back up, came back, found support and pushed back up. Now the stock is below the 20-day moving average. Now personally, from a person who believes in CHGG.com, or I believe that the company is reputable, this is a discount on the stock for me. I'm not seeing it as a negative move for the stock that it's dropped this much. I'm actually seeing it as a potential entry point for a strong hold on a stock for a price target of 83.50 or 88. So now the question is, how did I derive those price targets? So if we go back to the micro picture for the stock and we turn on these lines and this trading range that we have. So first of all, the trading range for the stock that we have is going to be between $73.50 and up to $79. So we're expecting the stock to consolidate between these two price points until it eventually gains gear to push over $79. So as it has more and more buyers, it'll gain that momentum to push up. Now, my first price target for the stock is going to be around $83.50. That was derived because there was a support of the stock. There was a support at $83.50 at one point where the stock had come down and bounced back up. And on that bounce up, it made a resistance at 90 and got pulled back down, tried to bounce at that support, but broke below it and it kept on falling. So therefore, when that support got broken, we want to see the stock push its way back up to that support and test it as a resistance. Therefore, we place our first price target at that point. So you're supposed to be taking profits at price targets, but if you believe the stock will go higher, in which we believe CHGG will, you don't take all profits. You simply take some profits and you move up your stop loss from what would have been $73.50 up to $79, because after the stock breaks that resistance automatically becomes a support. So now we have a new support when the stock pushes back up and a new price target of 90. So there is a lot of potential that I'm seeing from CHGG. I think the stock will definitely go far based on the technicals and based on the fundamentals in the current state that we're in as schools are opening back up. So that's going to be the first stock we're going to add to a potential position trade over the next week, 2, 3 weeks, 4 weeks, however long it takes to hit those price targets. Now, with that being said, it's important to keep stop loss points, and those stop loss points all depend on your own risk tolerance. So if the market crashes tomorrow, you need to know if you're comfortable holding through a market crash or you want to get out and take your money out of the stock. So that's going to be the first stock that we've focused on. The next stock we're going to go with is going to be Walmart. So a lot of potential in Walmart. Obviously, Walmart is coming up on its earnings, and earnings is going to be a big deal. I'm expecting a beat from Walmart only because of how much people stocked up during the coronavirus pandemic. And even if the Walmart stock does not beat earnings, I still expect them to climb back up just fine and surpass their all-time highs. So what do you do in the case of earnings coming back up, but a setup is being formed perfectly right before your eyes on a stock? You approach it the same way you would approach critical levels on a pandemic. So the pandemic levels that we're currently in are telling us that maybe the market shouldn't be as high as it should be as of right now. So we're expecting a correction. Any maybe experienced trader will know that a correction is imminent or it's right around the corner. So what do you do in these cases where you know that there's going to be a significant event like earnings or a correction? Well, you have two choices. You're going to either wait it out or you start smaller than you usually would. So rather than putting in 100% of the position that you're usually used to taking, maybe take 40 to 50% and contribute it to the stock, and then add more as things get more comfortable or on pullbacks in the future when the stock is actually moving in your favor. Now, in terms of Walmart, it's had 2 green back-to-back days. So it had a lot of buying. It broke out of this nice channel down flag-like pattern that it recently had. And then you can see that this pattern is not the first time it's created it. The stock has created a longer version of it right over here where it eventually did break out and create this leg that it's currently at. So the stock has been trying to break this high and it's nearly there. It's gaining a little bit of more momentum now. Money's flowing out of other stocks and into this stock. You can tell it broke out of the channel and now it's consolidating right out of the channel. So what we want to see next is Walmart to break 134. So when the stock breaks the $134 price point, I'm expecting it to move to 140. Now, whether that happens before or after earnings, I don't know. Nobody really knows. Nobody can tell you. But I will tell you that this stock, for me personally, it's a healthy stock. Walmart is not going anywhere. Walmart is only going to move up, especially as they open up more and more online sites for shopping and people become more attracted to them, and they put them right in the same category as Amazon. Maybe not as big, but I think they have a lot of potential. So I'll give them a price point of 140 as a price target. So one important thing to point out about Walmart, and this happens with every single breakout on the stock market, or nearly every breakout, is after Walmart broke out of the 128 resistance, notice how it made a resistance at 134. That's why that's going to be our breakout point. Now on that 128 breakout, and this is exactly what I love to see stocks do, it pulled back and bounced right at the support. So this tells you that all the people that bought it up to the 128 support, they believed in the stock enough to not sell it off when it dipped just below it. Therefore, that 128 price target is still a desired price point to have the stock at. Now, if somebody sold it under 128 and more people begin to sell it, now you know that people are not willing to pay 128 for the stock, and everybody who had their stop loss or selling points placed right below that 128, all these orders will start to trigger, and next thing you know, the stock falls to its next support where the next set of stop loss orders are placed. So there's a very key lesson for everybody. The reason why stocks fall under support is because those are usually stop loss points for a lot of traders who honor their stop losses, which is why you should honor your stop loss always. So that's going to be the second stock that I'm really focused on in the next quarter. The next stock I'm seeing growth in is going to be OSTK. Now, this is a high-risk stock, but they have been absolutely crushing it since the pandemic. Now, imagine this OSTK, when the market crashed, it crashed all the way down to $2. Since then, the stock has gone up to $95. At one point, it had hit $110 as well. So OSTK for me is the little brother of Wayfair. And as we all know, let's check out Wayfair's chart. Wayfair has had massive growth. Wayfair dropped to $20 on March 24th when it bounced back up, and now it's sitting is at $314. Why are these stocks growing so much? The reason why is because they're online companies. Online companies are seeing massive growth. Obviously, while everybody's spending time at home, they want to buy things for their house, which is what OSTK is focused on. It's overstock.com. They want to buy all this stuff online. So online companies are seeing a massive influx of buying, and their stock is only rising higher and higher. So what has happened to OSTK in the last few days of trading? It had released massive earnings. They beat expectations by 91 cents EPS, which is very impressive for a stock. Right away, the stock jumped up, and it's been going since. Now, you don't want to chase the stock on the way up. You always want to buy it on the pullback. So now we can assume that there's going to be a resistance of 110, because that was a price point in which the stock hit but pulled back, and it couldn't push over because of overbought levels. Since the stock pushed back, it pulled all the way back down to a low of $85.90 or $86, let's call it. So now we have a trading range. Let's go ahead and zoom in here. Now we have a trading range between 86 and 110. So the place where the stock pulled back is going to be our support, and the place where the stock got rejected is going to be our resistance. So there is a pretty wide trading range for the stock here. Therefore, you need to be careful with your position size, because the stock has a trading range of 85 to 110, but it's trading right at 95. So it's really not a big deal to enter here and place a stop loss right below that $85 point. Now the stock is channeling down, so it looks like the stock channeled down nicely and is now testing the outside of the channel. So you can see the stock channeled down for quite a while and now is testing or consolidating right outside of that channel. What we really want to see is a breakout over the $99 mark or the $100 mark. Once the stock breaks out of that $100 mark, we can place a first price target at 110, and then eventually the stock will test 110 to maybe move higher, which I believe it will, only because of their dominance in the online sector during the COVID-19 pandemic. Overall, I'm seeing growth from the stock. Remember, this is a high-risk stock. I won't really get into the low-risk, high-risk, but just understand that when I'm saying high-risk, I'm saying that you should watch your position size in it and maybe slowly, incrementally move up your position size rather than going in full force. So the next stock I'm seeing growth in is going to be BYND, which is another high-risk stock, but BYND overall, I'm expecting growth. So what happened in their daily candles today? So the stock had bounced up off of the low of 122.72 and had 1 day of buying. Now, 1 day of buying, like we had mentioned earlier, is not enough for us to make us jump into a stock. I want to see multiple days of buying before I jump in and out of a stock. Now, overall, if you don't know, BYND is a massive company in the vegan food market, and they're literally popping up all over the world. I mean, I'm talking Brazil, which is one of the largest beef consumers in the world, yet BYND has entered their country and is now growing into other countries and making more and more contracts for distributing their products with more and more fast food restaurants. The company is a newish company, so it's hard to trust it, and it's in a field in which not a lot of old-time investors are familiar with. This is a more, I would say, millennial stock. I would say this is a stock in which the younger people or the younger generation focuses on rather than the older generation. But overall, I'm expecting the company to be a growth company, a high risk growth company, that is. Therefore, when something is high risk, it also has high reward. So it balances itself out. So what am I looking for next from BYND is on the technicals. I want to see another green day of buying, and I want to see it push past the 10 and the 20-day moving average, because now I know that there are more people buying it on the last 10 or 20 days than their people had been selling the stock. So let's take a look at what the micro candles are doing. So on the micro candles, I'm seeing that the stock has been finding support right around 120, which is an important support for it because that was one of its initial breakout points. So when the stock broke out from this leg, I call them leg, each high that it makes, it broke out and it found resistance at 120, which eventually gained enough steam to break out of. And every time it bounced back, it bounced off of 120 and headed back up. So now the stock had bounced off of 20 two times and is now making what appears to be a attempt to push over the 130 resistance. So this is a resistance for the stock. An attempt to push over 130 and eventually test 140, which is going to be our first price target. So after the stock breaks over 130, I'd like to see the stock hit 140 and eventually push its way up to 160, which I, as a high-risk investor of the stock, totally believe that the stock will do that. So overall, I'm seeing growth from BYND. Now I'm going to move on to the very next stock, which is going to be Square. So Square, if you don't know, another massive company, and they are in the right field. They are a massive, they're massive in online business. They're massive in their app. They have swipe or card readers. They make it very easy for small businesses to operate and take card payments. So they're really all over the map when it comes to business, and they are fairly a new stock, but not too new. People have already caught on the hype of Square, and it is certainly a stock that I see as poised for growth. So after the stock had reported earnings, they had reported great earnings, they gapped up. So the stock was trading at 136 before earnings, and the day right after they released earnings, they gapped up to a high of 160. Now, anytime a stock gaps up, which is going to be the gap right over here, the stock always has a tendency to fill that gap down. So that makes us question, what is that gap, or what does it represent? That gap down simply represents people taking profits. So all the people that bought up the stock on that gap, they took profits and brought the stock right back down to the support. So the same support that people bought it up from or broke the resistance out of. So when we're looking at the daily candles, we can see that the stock formed two doji candles back to back and bounced right off of that 10-day moving average, used it as support, and had a great green buying day, giving us an entry point and potential for the stock. Now, when we look at the micro picture, we can also see that the stock is using the 142 price point as support. Therefore, we can place a low-risk stop loss at that point and know we have a safe entry over that point. And we can even put a high-risk stop loss at 138 if need be. The resistance that we're focusing on is going to be 146. So we can enter the stock low to the support, which is a great bargain, around 143, ride it up to 146. We expect it to have a little bit of resistance at 146 because that is a place of point that used to be a support but got broken under. So it's going to need some momentum to push it over. And then our first price target for the stock is going to be 154, which is the very next strong resistance that I'm seeing from it. So the 154, 156 price target can be achieved in weeks or months. It doesn't really matter because Square is only poised for growth and it's meant to be a long-term position trade. The next stock I'm seeing potential in is American Airlines. So American Airlines and all airlines in general, I'm expecting a bounce back from them any month, any week now, I would say, because as we all know, the technology index has risen up sharply. Everything that is related to online has been rising sharply, but it won't be long before traders and investors realize that airlines in general are going to rebound. There's no way America will let their airlines fail. They will contribute back. They will give them another stimulus. They will try to help them gain their employees back. That way we have a sound and safe airline system domestically for the country. So American Airlines in particular, I'm seeing a lot of growth. Being 1330, I think this is a stock that really meets the needs of those with maybe smaller portfolios. Therefore, I'm adding it to this position trade list that I'm seeing potential in. So what has happened to American Airlines in the past few days? So our group or our community has gone in on American Airlines in the last 2 days, and we actually exited right at the top, which was a perfect exit. So since then, the stock had hit the top of its channel. So it hit the $15 resistance that we had placed for it, and it pulled back instantly, and now it created an upside down doji, which is going, or an upside down hammered doji, that which is typically a sign of reversal from the trend. So now that the stock has pulled back, it has managed to find a way to close green again and is likely going to try to bounce back up. So I'm expecting American Airlines to bounce back up, and I have a price target for it for $17 in the next position trade that I take it in. We have supports at $13, so we can draw $13 as support, and then we can draw another support if need be at $12. And our resistance points are going to be the points in which the stock had gotten rejected at prior to this specific move below them. So now we have two resistance points, one at 14 and one at 15. I'm expecting the stock to consolidate between 13 and 14 over the next period, and then eventually test 14 for a breakout to 15, consolidate again, and then eventually test that to eventually hit our $17 price target to begin with. Overall, I do expect American Airlines to recover way past 17, but to start with, we're going to start with the $17 price target. Next one I'm seeing potential in is going to be in the same sector, not airlines in particular, but the travel sector, which is going to be Carnival Corporation, which is a cruise line stock. So same idea with cruise lines. It had the same exact movement. When it comes to the same sector stocks, they typically are going to replicate each other because sectors move together. The stocks go where the money goes, and the money wasn't going to these sectors in the last 3 days. Therefore, their stock symbol will, or their stock movement will kind of replicate one another. So overall, CCL, I'm seeing a lot of growth from it as well. The stock's price target is going to be $16.50. So you have support at 15, and your price target is going to be $16.50. In terms of the next stock, we're going to be talking about SFM, which is going to be a high-risk stock. Sprouts Market, grocery stores in general are seeing growth. A lot of people are staying home, therefore a lot of people are cooking. They're not eating fast food. They're not going to a lot of restaurants due to COVID, due to the pandemic. So Sprouts Farmers Market is seeing a lot more foot traffic and a lot more buyers in their stores. So with that being said, what has the stock done in the last few days? You can see that the stock had two back-to-back green days, which is exactly what we're looking for. So there were buyers on the 12th, and there were more buyers today on the 13th. Volume was consistent. The stock is trying to move its way back up, and I'm expecting it to consolidate tomorrow or push up and then continue its move back up. Now, in terms of the micro picture, we can see that the stock is it found support at 23.50 at one point. So we would want to place support at 23.50 for us to place perhaps a low risk stop loss at that point. And then the next resistance we need to focus on is going to be 25. So if the stock consolidates between these two price points, breaks out of 25, I have a price target of 27 for it. So the first price target we're focused on is $27. So I expect it to consolidate and then break out to that point. So the next stock I'm focused on is going to be here, or Turtle Beach. Now, this is for the video gamers out there. Here, or Turtle Beach, is going to be a headset, or they have a lot of gear for video games in particular. And for those who don't know, with Twitch being around, video game streaming is larger than ever, and Turtle Beach is in the perfect sector for that, especially while everybody is staying home and they're trying their hand at things like Twitch, and they're watching a lot of other gamers play. So here just reported earnings, and they didn't have the best earnings, but they did nearly increase their growth for the second quarter. So they are anticipating a very large quarter coming up, and that may sound good for investors to buy it back up from this low that it's currently at. When the stock pulled back, it bounced off the $16 price point and it bounced up, and we have a support at 16, and resistance is going to be placed at the highest point it made before it got rejected, so that's going to be at 1750. So we have support at 16 and 1750 to resistance. So we can expect the stock to consolidate. It's forming a little bullish hammer, or a bullish flag at this very moment right below that resistance. So we can see that it's going to try to gain momentum to break out. The first price target I have for here is going to be $20. The next one after here is going to be Marriott. So obviously Marriott is a massive company. It's one of those companies that has been growing for 5 years. As you can see, it's only gone up till the pandemic. Now the pandemic wiped out their stock. Nearly 70% of their stock's value has gone down, but it has retrieved a lot of that value since that crash. In the last few days of trading, the stock is replicating the airlines and the cruise lines industry movement. So obviously, we're seeing a pattern in all leisure and travel stocks. The stock's micro candles are forming what appears to be a bullish flag. So the stock, you could see, had a massive vertical run right around earnings, and now is creating a flag, which is a bullish sign that the stock is only poised for growth from here. So I'm expecting the stock to break out. Where am I expecting the stock to go from this breakout is going to be 120, which is the very next strong resistance that it has. So the stock does have a lot of growth. I'm not even going to put a stop loss on Marriott. I'm just going to buy and hold my shares until they meet my price targets for me to take profits at them. And then finally, for the smaller accounts, we also have Denny's. So Denny's has had a massive run. Let me go ahead and remove these. Denny's is creating that bullish flag, but you can see that it's already broken out of it. So it created it for a while, and then it broken out, and now it's consolidating right outside of it. Our resistance point to focus on for Denny's is going to be the highest point that it made, which was 1070. So we can place a resistance at 1070, and I'm expecting a breakout over that point for a price target of 1250, which is the very next strong resistance that I'm seeing on the stock, and eventually it will move its way up to $14, which is the second price target. But overall, these are some of the companies that I'm looking at for the next quarter. I haven't really, I don't want to really go through all the companies because I want to make it fair for everybody in my chat. They are all, subscribed to our service, so there are a lot of companies that I still have written down. If you'd like to be a part of the chat, I'm going to leave the link in the description. Don't forget to subscribe to the channel. Don't forget to like this video if you like what you see. Share it with a friend. Remember, guys, trade at your own risk. Every setup is subject to change based on market health and market volatility and sector health and movement overall. I encourage you to do your own trading and your own research and your own analysis before jumping in and out of any of these stocks. I hope you enjoyed this video. Give us a thumbs up if you liked it. Once more, again, my name is Q, and I am the person who runs Hyper Stocks, or owns Hyper Stocks. Thanks for checking.